Hi, I'm Rich Harvey, CEO and founder of Propertybuyer. Today, I'd like to share my outlook for property prices for 2022. During 21, the property market went from white hot to red hot and then finished the year with an orange glow. In 2022, I see the market continuing to grow, but at a much slower rate. Peak price growth is now behind us. High quality premium property, that is A-grade stock, will continue to be in strong demand and prices will remain resilient. Anything with a beach or harbour view or just the wow factor, particularly in the prestige sector where there's always a lack of ongoing supply. In the middle price segments, 1 million to 3 million, we should see a significant rise in the volume of listings, which will give upgraders and home buyers much greater choice for choosing their next home. In the lower grade properties, on busy roads or next to industrial parks or really located in inferior areas, they'll really struggle to achieve meaningful price growth in 2022. So here's what I'm predicting as a general guide for the year ahead. Are you ready? Sydney, 6% growth. Melbourne, 7%. Brisbane, 10% plus. Canberra, 7%. Adelaide, 7%. Perth, 3%. And Darwin, 6%. And also Hobart, 7%. But remember, there's not one property market. There's over 15,000 suburbs in Australia, and each suburb and city and region is driven by a lot of local factors. Now, all the major banks have also predicted positive price growth in 2022, but then a correction in 23 in anticipation of interest rate rises. If you start to see the media headlines predicting dramatic falls in property prices, then you know the media are looking for a new headline. The RBA has repeatedly said that for interest rates to rise, wages growth and inflation would need to be over a sustained level of 3% per annum. But this would require an unprecedented surge in wages growth in the coming months, which is very unlikely. What is most likely is that we'll see a resumption of full international border reopenings, which will bring a flood of 200,000 migrants to fill the gaps in job vacancies. Now, higher migration levels will then place strong pressure on property prices and rental demand for our markets, which are still undersupplied in most areas. Now, there's three key factors to look out for in 2022 that will greatly influence the market. And these are simply 1, the price of credit, that is interest rates. Number 2, the availability of credit. And number 3, consumer sentiment. If APRA step in and crimp investor lending too harshly, then we could see a dramatic pullback in property demand. An exodus of investors from the market would see rental prices skyrocket as we are simply not building enough properties to satisfy future demand. In 2022, I'm still buying, and I'm taking on a long-term perspective on the market. Buying when you have the capacity to buy makes good sense rather than trying to perfectly time your entry into the market like an Olympic diver. I like to let capital growth do the heavy lifting over time. If you'd like help securing your next property, please reach out for a conversation with my friendly team of buyers agents today. I'm Rich Harvey, thanks for watching.